Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. Uncle Frank is as giddy as a schoolgirl, and I'll tell you why. Because aside from my retirement accounts, I'm only long AMC and XRP. And the people that have been dicking us around for the past 3 years or so have a hell of a lot more to worry about than I do. Speaking only for myself, I'm not selling AMC until I see some panic short covering, and I mean throwing up at your desk short covering. And I'd rather own XRP tokens than miserable US dollars any day. So let's sit back and get ready for the show. The people that are on the ledge are regulators, lawmakers, politicians facing elections, over-leveraged hedge funds, the prime brokers that back them up, market makers that provided unlimited liquidity, and of course, clearing firms. Most of my subscribers know that I really don't think we can win under current conditions. They will have to lose for us to win. They're going to have to make a mistake. Our enemies are leveraged to the sky, and if they make one wrong move over the next 20 days or so, the entire world could feel the impact. My favorite part about a calendar packed with treacherous events like this is that you never know if a swan will come in for a visit. So guys, it's been a long fight. People making fun of us for sticking with this turd hunt for as long as we have. And I don't know if we're going to win, but maybe we'll get some payback here. I hope Wall Street stocked up on Tums because they're going to need it. Now, today, February 27th, we're going to get durable goods orders and consumer confidence, but I promise that's the most boring thing on this calendar. Wednesday, February 28th, we get the AMC earnings call. Thursday, February 29th, 8:30 a.m. Eastern, initial jobless claims and the PCE data group. The entire data group, that is the Fed's favorite indicator, and no less than 5 people from the Fed will be talking on Thursday. It's going to be a barn burner. Now, Friday, March 1st, Dune Part 2 drops. And you know what? That's our first big blockbuster of the year. If we have a good earnings call and Adam doesn't wreck any rallies, who knows how much momentum we could get from a big turnout for Dune 2. But Friday is also the first partial shutdown date, potentially. Lawmakers are on winter recess until Wednesday, February 28th, which means they'll have a short timeline to negotiate a spending deal or pass yet another continuing resolution to prevent a partial shutdown. Now, March 6th and 7th, Fed Chair Jerome Powell has to testify in front of Congress. Friday, March 8th, is the next possible shutdown date because the stopgap is now two-tiered. Monday, March 11th, the FRB ends the Bank Term Funding Program. Tuesday, March 12th, CPI. Thursday, March 14th, PPI, right? Friday, March 15th, triple witching expiration day, the first triple witching day of the year. And by the way, that is that particular expiration that has a huge swell of AMC calls, right? Then the following week, March 19th and 20th, is the FOMC meeting with a new focus shift to balance sheet runoff. Guys, this is a highly treacherous calendar for everyone except us. So let's start with our earnings call. All the Wall Street analysts think we're going to lose money for the fourth quarter of last year, but I believe we could still look good quarter over quarter and year over year. Quote, analysts on Wall Street project that AMC will announce a quarterly loss of 65 cents per share in its forthcoming report, representing an increase of 53.6% year over year. Revenues are projected to reach $1.1 billion, increasing 10.5% from the same quarter last year. Over the past 30 days, the consensus earnings per share estimate for the quarter has been adjusted downward by 6.2% to its current level. Well, we've had surprises to the upside, I think 9 out of the last 10 reports, so who knows. I expect we will track along with Cinemark's earnings, only a little better. The wild card will be how much extra juice we got from Taylor and Beyonce, but we have to balance that with the sad fact we didn't have a year-end Avatar-like film to finish the quarter and the year with. There could be a lot of talk about the impact of the strikes and the reduced number of wide releases coming for 2024. The big mystery is which Adam Aaron will show up for this call. Will it be, the Today We Pounce and choke on that Adam? Or will it be we're dangerously close to bankruptcy and we need to dilute more at record low stock prices again? It would be great if we heard that the dilution is over for the next 6 months or a year, but I'm not holding my breath for that. 99% of CEOs like to build up their stock price and then sell, but ours is devoted to halting every rally and swapping stock for debt at, deeply discounted prices. Now, there's a voice in my head that says there is no way they can pay themselves another round of outrageously high stock bonuses for 2023 while the shareholders are down 92% year over year, but I'm almost afraid to hope at this point. If there is a rally and Adam kills it before, during, or after the call, I will start a change.org petition to immediately suspend 2023 stock bonuses. They can keep base salaries and non-stock cash bonuses at 2022 levels, but we should insist that stock bonuses be reduced by what the stock was down for 2023, which was approximately 83%. Now, guys, I sincerely hope the call is full of good news and positive surprises. We're doing it after the close, so we still have to worry about what Adam could do pre-market or during market hours the next day. If he dilutes again, kills another rally, or even just floats the idea of another stock split, I believe he will finally lose the remaining yes-tards and Adam Aaron fanboys that have stuck with him while he's destroyed over 90% of our market cap, helping Wall Street out of a ridiculously difficult short trade involving billions of synthetic shares, in my opinion. Now, if things go well and we get a good rally, Dune 2 will be very important for momentum, and I'll show you why. Now, this article is from Snacks. Dune wriggles into theaters, which are relying on blockbusters after the Hollywood strike slump. More than 2 years after Dune Part 1, moviegoers will head back to Arrakis on Friday for the premiere of Part 2. Warner Brothers Discovery's Sandy Epic was supposed to hit theaters in November, but got delayed after Hollywood strikes forced a promotion pause. With an anticipated $60 to $80 million opening weekend, Dune's follow-up is poised to be the biggest movie of the year so far, which isn't saying much. U.S. box office sales are down 15% for the year, with 2 record low weekends this month. Part 1's pandemic-era hybrid release was a success, grossing $402 million. Considering the first Dune hit theaters and streamer Max at the same time, the sequel's big screen-only debut could give it an edge. The box office is struggling to pull its feet out of the sand after a 6-month production pause, during which striking writers and actors secured better pay and protections. Theaters have been recovering since pandemic shutdowns, but this year's forecast is still gloomy. Analysts expect revenues to dip 5% from last year and 20% versus the average gross of recent pre-COVID years. AMC, which reports Wednesday, posted record Q3 revenue in November, boosted by Barbie and Oppenheimer, but it said strikes could make for a challenging year as studios catch up to production schedules. And finally, the takeaway. Hollywood relies on FOMO. Films that become Zoom meeting small talk sustain the industry. Avatar: The Way of Water has brought in $2.3 billion globally since its December 2022 release, while the Barbenheimer duo has grossed over $2 billion. Premium showings of Oppenheimer and Dune Part 1 gave folks an extra incentive to watch in theaters. Oppenheimer was IMAX's biggest earner last year, and more than half of the first Dune's box office revenue came from IMAX and Dolby screenings. The good news here, guys, is this time we're dropping this big bitch in the theaters only. It's not going to be streaming at the same time like the last Dune, which was still a big earner for us. Now, as I've said, one of the most interesting events on the calendar is our first triple witching of the year. The March 15th expiration is showing over 214,000 out of the money calls for AMC, which sticks out like a sore thumb. This has been elevated for a while, so that indicates professional interest in the series. I don't know what it means yet, but you won't want to miss that Friday's trading session. This is not financial advice, and I am not a financial advisor. See you guys at the bell. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.